everyone, welcome back to my channel. Today I wanted to talk about risk management. I believe this is the most important concept one should focus on, especially when you're just starting out to invest. I'm just going to go over a few basic concepts that I find very helpful and that's easy to apply. Okay, so one of the first things that you want to confirm is how much risk is associated with the gain for a specific investment. So here you have two ratios, 1-2 and 2-1. Again, it's risk to reward. So the risk is your actual investment and reward is the potential gain you get from that investment. So 1-2, 2-1, which one do you think is most favorable to you? All right, so I hope everyone chose 1-2. So again, 1 represents the risk. So for every dollar, let's say, you're expected to make double that. In contrast, for the 2-1, for every $2 you put in, you're expected to make $1. So you're risking more money for less returns. These are simple ratios, but often the amount of return is going to vary a lot. You may get 10%, 20%, even 5%. So it's good and there's different ways to set up how much you're actually risking. So for example, even if a stock is worth $100 and you expect to make a 20% return, you can set it up on your platform to automatically sell that stock if it decreases past a certain amount. Say for again, it's $100. You can set it to sell at $90. So again, instead of risking that $100, you're actually only risking $10 out of the 100 relative to how much you could potentially gain. So let's put it again in perspective. You have a $100 stock and you expect it to increase by 20%. So 20% gain is obviously $20. To make it more of a favorable ratio to you, you wouldn't want to do $100 to every $20 because again, that's a 5-to-1 ratio. So you're risking, you're risking 5 times what you could potentially make. Not good. So what you can do is set your settings such that the platform sells the stock at $90 automatically. Therefore, if you break down the new ratio, the risk is actually $10 relative to $20. So therefore you have that 1-to-2 ratio right here. All right, so I'll go in further detail after that on what you can do on your app. I use the Wealth Simple app, but what you can do on that app to set it up so it's always a favorable ratio to you. All right, so I guess one of the primary goals, especially for me, is to learn. But with learning requires giving yourself time to learn and apply those lessons. This concept directly relates to giving you more time to learn and make better investments. It's essentially a way to determine how much to invest each time. A lot of the times, myself included, you can get caught up in the hype of a specific stock and end up investing large percentages of your account. The only issue is that if something goes wrong, you can end up wiping out your entire account very fast. All right, so just to illustrate this point, I put together 2 cases that we can compare. First of all, their main similarities is that they're investing based on a 1-to-2 risk ratio, so it is favorable, and each investment has a 50% likelihood of success. The big difference is that Dave typically invests 50% of his account and Chanel invests 2% of her account. All right, so this is how I learned to conceptualize it. We have 2 individuals, both let's say have 100K in their account, and they're both winning at a rate of 50%. 50% of their investments are a win. So if we go according to to this sequence of wins and losses, starting with Dave. He loses first here, first investment, 50% gone. Second investment, again, 50%. And third investment, again, 50%. By the time he gets to his third investment, his account is almost reduced to nothing. This is, of course, is not ideal. And again, his risk ratio is nice and his success rate is nice. However, just the fact that he invested a lot each time was essentially his downfall. All right, so this is what it looks like. If you go over the first 5 or 6 investments, you can see that she loses 3 times straight, which amounts to -6. And then she wins 2 times, which amounts to a +8. If you continue to go down, it'll be reduced to this. So it's a total of -10 on her losses and a total of +20 for her wins, which nets her a +10 overall on her investments. So it's important to keep in mind that the risk ratio, the win rate, as well as the companies they invested in are completely the same. So this indicates that it's so important to be mindful of how much you invest each time, because it contributes to how much you make and lose over your long term. All right, so after you establish your risk tolerance, it's important to determine how many shares you can buy that essentially respects that tolerance or is consistent with it. So I use a risk calculator. It makes it a lot easier and accounts for important things such as again, your risk, your overall account balance, and the point at which you want to buy that share, as well as your stop loss. So for example, your account balance is 1,000, and let's say your risk tolerance is 3. You have a share price of $10. That's the point at which you want to buy it. And your stop loss is 9. So you will automatically sell that share if it drops to 9. Okay, and again, it calculates it automatically, and in order for me to stay within that 3% risk tolerance, I'm able to buy 30 shares at a stop loss at 9. All right, there's one thing that I wanted to bring to your attention is the stop loss. So again, that's how much you're willing to let the share drop before you sell it. So if you decrease your stop loss, so essentially making it lower, let's say to 5, the amount of shares that you can buy drops as well. Because again, the stop loss represents the amount of space or amount of loss you're willing to take per share. If you're willing to take less of a loss, that means you're going to have more money overall to dedicate to buying more shares. So again, we'll do it again. Let's say you have 100,000. Your risk tolerance is say 50. You're buying your entry point is $10, and your stop loss is 5. You're able to buy 10,000. So again, your risk tolerance is higher. It allows you to buy more. However, again, there's more at risk, of course. And if we were to change the stop loss, say at 9, you're able to buy 50,000. Right? Okay, so that's important to keep in mind in terms of stop loss, entry, and risk. All right, so this concludes the video. I hope you enjoyed it and I hope you learned from it. Just to go over a summary, we went over the risk-reward ratio. Again, that's the amount of risk you're willing to take relative to your reward, and you can manipulate your risk by setting a certain stop loss. We also went over the importance of being selective about how much of your account you invest in each investment. This is critical for the long term. And then we also went over how to determine how many shares or your position size you should take to stay consistent with your risk tolerance, given your stop loss. Thanks for watching, and please like and subscribe.